everybody. My name is Valentin Komarovsky. I'm a Cardano stake pool operator for Cardano stake pool LEGA, and this is the monthly delegator call for February 2022 now. And the agenda for today's call, I'll go over that first. So we'll go over the Bitcoin and crypto market, what's currently happening, and what's the outlook for the near term and long term. We'll talk about the inflation and federal debt. I have some information on Cardano a year in the review and what's been accomplished in the past year, and the differences that we see between January 2021 and 2022. Some news on Russia and India planning crypto regulation and taxation, and then where you can buy ADA, which is the native currency of Cardano, how to set up staking, and how to keep it secure. That would be more for like those who are joining us for the first time, for new delegators or prospective delegators. We'll go over the stake pool performance for the past 6 epochs, so for about the past months that we haven't met, and then outlook for 2022 and what's coming next for Cardano this year. And I have some updates on ADAnomics, which is the Cardano staking economics. So we'll keep it to those topics. If there's anything else that you wish to ask to cover or discuss, please feel free to raise your hand or put something in the chat at any time. Hi, Mark. So this is a casual discussion. There aren't really many rules. So feel free to interrupt me at any time. So in the news this week, I think it's important, especially in the current market slump that we're seeing together with the stock market. The crypto market hasn't done well in the past couple months. We've had the new all-time high for Bitcoin in November when it hit 69,000, and right now it's trailing around 37,000. But as most of you know, when there's blood on the streets, it's the best time to invest and the best time to buy. So there have been some good news that I think are good news this past week that I want to cover. So in Russia, about 2 or 3 weeks ago, there was a news came out that the Russian central bank wants to ban all crypto and Bitcoin, and it went basically up to those who are really the decision makers over there, and it's been decided that Russia will tax and regulate crypto, but they will not ban it. And another positive news for Russia is Anton Siluanov, who is the Minister of Finance, suggests letting banks custody and sell crypto, which I think is huge. This is something that's currently offered in some countries, like Germany has this offering where you can buy Bitcoin at your local bank. So this is something that Russia is considering, and I think it's great news, and it's something really positive in the current slump where we are. If you have connections in Russia, or you know somebody there, or you're from there, I was born in Russia, so for me, all the Russian news are interesting, and I do have friends and families that are family members that are there. So to me, I think this is good news in comparison to the previous attempts to have some kind of a ban. So we know that China went that way, and China banned Bitcoin mining and exchanges for now, but there's some positive news in that as well. So the other news that's very positive, and I'll tell you why, I have some info on this and some of the future next slides. India, which is another country that previously banned crypto altogether, Bitcoin and otherwise, they're now working towards regulation and legalization of cryptocurrencies with a 30% tax, and there's actually a detailed plan to tax and regulate cryptocurrencies. So I think this is great news because India has more crypto users than any other country, and I have some statistics on that I will show you. And I think that this news is extremely important because Bitcoin and Cardano and a lot of other cryptocurrencies, they have limited supply. So the more users you have, the faster acceleration of the user base, the better it is for adoption and for value of that cryptocurrency and that platform. So we welcome 100 million crypto users from India. And then another news, China, which banned cryptocurrencies, something came out recently from China, and I'll send these links around to all these articles that you can read them. This came out on January 14th. China that banned cryptocurrencies, they are actually allowing NFTs, and they're going all in on NFTs. And you can read down here that there's a Chinese company that owns the rights to mint, control, sell, and transact in NFTs. And there's also a Chinese digital yuan. So they have their own Chinese central bank digital currency. So the China strategy here is ban Bitcoin and other cryptocurrencies, and then come out with our own way to control cryptocurrencies and control NFTs and control the stable coins, the digital yuan. So China is doing their own thing. You know, they have their own firewall and they have their own internet pretty much, and now they have their own NFT platform and their own digital yuan. So this is their theme, and they've been going with this for many years. So why is this news important? So India has 100 million cryptocurrency users. Their population is over 1 billion. So on the left-hand side here, you see the number of users, and on the right-hand side, percentage of population that's using cryptocurrency. So obviously, you know, with a over 1 billion population and a 9% user base, you're going to see there's 100 million crypto users in India. And I think that it's extremely important because they have one of the fastest growing economies in the world in India, and they have more new internet connectivity than any other country. So growth of crypto in India will be good for the entire space. And then some of the other countries here are interesting. Nigeria, Turkey pops up, and then on the bottom here you have US and Germany. But the fact that Nigeria, Philippines, Turkey, Peru, that they have the highest percentages, I think it's attributed to something else, and I'll show you this in the next slide. So this is also from Statista, crypto used by population. This is a different source. So they have Ukraine, Russia, Kenya as the top three. So it depends who you ask, you get different data. But here also you have Ukraine, Russia, and Nigeria somewhere in the top. So I think it's fairly good data to say that in these countries, Ukraine, Russia, Kenya, India, you have some of the highest users of crypto. And as far as where Bitcoin is, you can also see that Russia, Nigeria are the second and third place, and then you have Europe and China. So why is this important? So if you look at where the countries with the highest inflation are, it's Turkey, Nigeria, and India. They pop up in the top 5, and also you have Russia here also with high inflation on this list. And to me, that shows that in countries where inflation is high. Oh, okay, we have somebody who has a question. the question that was asked is why is regulation and taxation is actually good for the blockchain and crypto space? And I think that it's a valid question. And the answer is that it's better than a complete ban like you see in China. So earlier, this goes back a few years, India announced that they were banning all cryptocurrencies and Bitcoin altogether. And about 2 weeks ago, we saw news about a proposal from the central bank of Russia saying that they're asking the government to ban Bitcoin and cryptocurrencies completely. So taxation and regulation is good because it's better than a complete ban and it legitimizes the space. For the most part, investors who are pension funds, hedge funds, um, investment funds, they're afraid to go into blockchain and crypto because they don't understand regulation and that there is no clear regulation from government. There is no clear laws, no clear taxation rules. So they don't know how to on ramp and they don't know how to proceed. They're not sure if it's legal, and especially in countries that that are leaning towards less democracy and more authoritarian regimes like India, China, and Russia. In those countries, if there is a complete ban, then those entities would be afraid to invest altogether. But once the government comes out and says, well, we're not banning it, but we're going to regulate it, and here are the rules, and here are the tax liabilities, then it legitimizes the space. It makes it basically legal. It's written in the law. You know what's taxed and how you should act in certain situations. So it will bring in more investors and it will bring in more people. And those who are in the shadows, it will bring them out of the shadows and make the space available to them. So I hope that that answers your question and that it makes sense. These are inflation numbers in the United States. So we had inflation under 2% for a few years, and the U.S. government tried to actually get inflation to about 2%. So in the past 2 years since coronavirus started and the U.S. Monetary supply was increased by about 50%. So currently the M1 and M2 are about 12 trillion. If we go back 3 or 4 years ago, it was at 8 trillion. So we basically 40% of all dollars that existed since the start of the United States were printed in the past 2 years. So this plus other factors like supply chain logistics are showing us that the CPI, consumer pricing index, and inflation are going towards 7%. So we just learned that inflation in December, January was at 7%. So inflation is rising in the United States. The Fed, and we've seen Powell on TV saying that they will be, during his confirmation hearing, saying they will be raising rates to fight inflation. But in my view, they won't be able to do anything with the inflation. It will continue to increase over the past several years just because of the monetary supply and logistics issues. So let's see where the prices are rising most. Gasoline, so gas, if you fill up your car, unless you have a Tesla, you know that gas went up by about 50%. Used cars and trucks, so this is amazing. I to those of you who know, I had a truck which was about 20 years old, which I bought in 2013 for 11,000, and I just sold it for 5,000 like 2 weeks ago. So very happy with that transaction because over so many years, it wasn't really worth that much. And you can, if you have a used car and you want to make some cash, sell your used car now because cars are actually appreciating in value. So used cars, utilities, gas, if you purchased heating oil or if you paid for natural gas, um, gas and heating oil went up about 24%. And so all items overall 7%. And this data is from chart R. Tobacco and smoking products sound the highest. So, and then food and electricity is also. If you go to a grocery store, I'm sure you have seen the prices there. So the overall message is the countries that have high inflation, and I'll just go back to show what those are. Turkey, Nigeria, India, those happen to be some of the highest uh, participants in the crypto space. And I think what will happen, the market is kind of in a rut right now with Bitcoin and cryptocurrencies. But if you look at Bitcoin inflation, this is Bitcoin inflation over its existence. Bitcoin inflation rate is at 1.2% right now. So every 4 years, there's a halving event where Bitcoin reward gets cut in half. So the number of Bitcoins that get rewarded for somebody who guesses the block is cut in half. So right now, 900 Bitcoin enter circulation every day. It was 1,800 roughly 2 years ago in April of 2020. And in another 2 years, in 2024, that inflation rate will be cut in half again. So there'll be another halvening event. And instead of 900 Bitcoins a day, there'll be 450 entering circulation. So the inflation of Bitcoin is falling. And if you look at the appreciation of Bitcoin, yes, there is volatility, but if you look over time, the price of Bitcoin has gone up 100% every year for the past 10 years. So this is the inflation rate for Ethereum and Bitcoin. So Ethereum is in yellow, and Bitcoin is in white. So when these projects start out, they have a higher inflation rate, and then the inflation rate gets cut. With Bitcoin, that happens every 4 years. There is a gradual decline with Ethereum, and I have something on Cardano to show the inflation rate of Cardano. With Cardano, basically, there's a cut in rewards that happens every 5 days with a new epoch, and I have something on that. So the message here is this is on balance on exchanges, but the message here, actually wanted to go to this slide here. This is the stock to flow from Plan B. As inflation in fiat currencies is going up, inflation in cryptocurrencies, most of them that have inflation built in and have a limited supply is going down. So it's certainly going down in Ethereum, Bitcoin, and Cardano. So on the current situation, I just wanted to show this slide. This is from Glassnode, and this is a balance of Bitcoin on exchanges over the past year. So the price might be going down, but so the balance in exchanges, what that means is if you look at Bitcoins that are in orders for sale on exchanges, this number has been going down gradually for the past year or so. So there are 21 million Bitcoin that will ever be in circulation. 90% have been minted. So we're at about 19 million Bitcoin in circulation now. It's said, nobody knows for a fact, but about 4 to 6 million Bitcoin have been lost, and 3 million was on exchanges about a year ago, and right now that number is down to 2.5 million. So that number is going lower and lower, and I think that's partially because with wrapped Bitcoin and Bitcoin rewards and platforms like Celsius, BlockFi, and Nexo, you can get 3 to 5% interest on your Bitcoin, and I think people are transferring their Bitcoins there to earn some rewards, and that's why I think it's the balance in exchanges is going down. So the lower that number is, the higher is probability there will be a breakout in price at some point, which I'm sure that it will be. But this is the updated stock to flow. So for those who are new or who don't know, there's this analyst from I think he's in Holland. He calls himself Plan B. He's very active on Twitter. You can follow him at 100 trillion USD on Twitter if you have a Twitter account and don't follow him yet. But he put this model together, and what this means is this is a logarithmic scale. So it goes from 10, 100, 1,000, 10,000, $100,000 per one BTC. So he's showing how, based on the halvings, how that the halvings reflect the price, and the color of the dots shows how far away you are from all-time high. So like the red is where you are at all-time high, and then yellow, green, orange. If you're towards the blue, then you're further away from all-time high. So we can see here in 2021 and 2022, we had in May and November 2 all-time highs. So the first one was 65,000 USD per BTC, which was in May, and then the second one in November was 69 or close to 69,000. So what this shows is we're in a good place. If you're a new entrant to the market, or if you just want to add some crypto to your portfolio, right now is probably a good time to do it, because you're far away. Bitcoin leads the market right now because it has the highest market cap, and it's 40% of all crypto by market cap right now is still Bitcoin. So it leads the market by its price. When Bitcoin's price goes down, the entire market falls. So when Bitcoin price is low, or if green, as you see here, if it goes lower, then you'll see blue, and it will be even better time to buy. So that's where we are right now. And this is price of Bitcoin on the left-hand side, and on the bottom you have the number of users. So right now, currently, it's said that we're at about between 200 and 250 million crypto users overall in the world. So apparently we'll get to 1 billion in the next few years, and that price will be a few hundred thousand. If we follow the scale, once we hit 1 billion users, then each Bitcoin will be worth a few $100,000. So we hear these numbers from all the time. Kathy Wood thinks it's $500,000 to $1 million by 2030. Plan B thinks it's 300 to 400,000. Raul Paul thinks it's 200 to 300,000. So it depends who you ask. But if every USD millionaire wanted to get 1 Bitcoin, there wouldn't be enough available for sale for each one to own 1 Bitcoin. So go figure. If all the millionaires decide to go buy Bitcoin, then you probably will see a million USD per BTC. There's actually a really good model for Bitcoin price, and if you just take inflation into account and not let's say there is no user adoption, right? There are no new users on the Bitcoin network, and we just keep going with the current rate of inflation. By year 2050, Bitcoin will hit $1 million USD. So the question is whether Bitcoin will always rule the market and be the guide for price valuations and where the market is, or will other cryptocurrencies grow in value, and therefore Bitcoin will take a less of a dominant role in guiding where the market structure goes. So that's my understanding of the question. And it's a good question. So let me just go to CoinMarketCap. So if you go to CoinMarketCap, and there's something called the Wayback Machine or the Time Machine. If you Google it, you can actually go to CoinMarketCap and look at the top 10 5 years ago, 8 years ago, and the top 10 or top 15 5 years ago was completely different. Okay, so things change fast here. So if you think of Bitcoin, if you scroll up here, you can see BTC dominance is 41% right now, and Ethereum is 18.6%. So what that means is Bitcoin owns 41% of the entire market capitalization, and ETH 18.6%. And you know, for ETH, that's huge because ETH has only been around for 6 years, and Bitcoin has been around, let's say, 12 years, right, or close to that. And ETH got up here, and these always change. Cardano right now is number 6, and these coins, they struggle. So the entire market cap of Bitcoin right now is 704 billion. When it's at $50,000 per BTC, it's 1 trillion. The market cap of gold is roughly 8 trillion. So there are a few problems with gold. Gold hasn't done so well in comparison to the amount of money printed. And in my opinion, it's because nobody knows how much gold is out there. And the countries that are producing gold, I have some really good recordings on this on YouTube. If you check out our YouTube channel, some of the previous delegators calls, we compared Bitcoin to gold, right? So if you think of Bitcoin as digital gold, and there is a finite supply of Bitcoin, and we know exactly how much of it is out there, there will never be more than 21 million, and a good percentage of that is lost. So if you compare Bitcoin to, let's say, the gold market, and if you ask the Generation Z or millennials, well, where would you invest your money? Is it gold versus Bitcoin? They'll tell you Bitcoin. So as the market matures, and as those people who are Generation Z and millennials and the generations that come after them, as they try to hedge inflation and invest money into something, they will invest in Bitcoin and other cryptocurrencies. When the market is in a bull cycle, uh, altcoins, and altcoins is generally everything other than Bitcoin, they have better returns than Bitcoin. But when we're in the bearish trend, Bitcoin doesn't lose as much. So like Ethereum was close to 5,000, so it hit 4,800, and now it's at 26, so it lost close to what Bitcoin did. But if you look at some of the other coins, like VAT, it lost 70%. Cardano lost 60%. So the altcoins, I think they're more like the equities of the traditional world, and Bitcoin is more like gold. But as people invest more, as those platforms develop, I think that Cardano and Ethereum, they will break away from this anchoring in Bitcoin, and Bitcoin price will become more stable. So right now we have it's interesting. Like if you go back a year ago in December, Bitcoin was at 37,000, and people were screaming, "Yeah, we're in a bull market." And right now, Bitcoin is at 37,000, and everybody is down and and in a bad mood. And that's because it went up to 65, 69,000, and then it went down. If it didn't do that, then people should still would have been excited, right? So to answer your question, I think with time, as Bitcoin price stabilizes and has less of a price swings, people look at it more as a long-term stable investment. It's going to become almost like a stable coin, so to speak. And other platforms that will perform more like equities, which will have projects that run on them, like Cardano, Ethereum, who knows, maybe Solana, VAT, and Algorand. I think those will take a bigger bite out of the market cap of the entire market, and they will be less susceptible to price swings of Bitcoin. And if you look at the gold market that's been around for thousands of years, and equities market that's been around for tens of years, maybe 150 years, Bitcoin and the crypto market overall has only been around for successfully for about 12 years, 11 years. And if you look at Ether and Cardano, Ether has been around for 5 years and Cardano also 5 years, or maybe Ether a little longer, 2014, so 7 years, around 7 years. So as time goes by, Bitcoin price will stabilize and will fluctuate less. It will become a bigger market, and other coins will become less dependent on it. So I hope that answers your question. So we'll dive into I think it's enough for Bitcoin for now. We'll dive into Cardano. So Cardano is a delegated proof of stake blockchain. There's with proof of work with Bitcoin and currently Ethereum, you validate transactions and produce new blocks by using equipment that utilizes processing power and electricity. With Cardano, it's proof of stake, where the more stake you have, the more transactions you can validate and process, and the more rewards you can earn. So the rewards are minted based on ADA supply that's already in circulation. If you own Cardano ADA, if you participate in the protocol, it gives you a right to stake your ADA to receive rewards, and those rewards come from reserves and transaction fees. So if you're here for the first time, welcome. This may be repetitive for most of you or some of you that have been here before or existing delegators, but for those who are joining us for the first time, I got some key terms and concept of proof of stake. So ADA staking rewards are newly minted supply of Cardano cryptocurrency that the stake pool operators create when new blocks are minted and certified. So those rewards, they come from transaction fees and from ADA reserves. The reserves are coins that have not yet been minted and have not yet entered circulation. Delegator is somebody who owns ADA and assigns their right to mint ADA on their behalf. So if you own ADA, you can receive rewards in two ways. One, you can run your own stake pool. It's a public blockchain, so anybody can do it. Or you can delegate your stake to a stake pool operator like myself to earn rewards on your behalf. Stake pool is a transaction validator and a block producer on a blockchain. So stake pool is a combination of the stake pool operator and any delegators that it has. Stake pool operator is somebody like me and our team who run computers that validate transactions on a blockchain and process transactions and create blocks. An epoch is a period of computing time that always equals approximately 5 days. So every 5 days, there's an epoch turnover. During this epoch, a certain number of blocks are minted, a certain number of transactions are produced, and then it turns over, and a new epoch starts. So slottery is a random process like a lottery that assigns slots or batches of transactions to be completed by stake pool operators. So the way that it works is based on the amount of stake that's in your pool, in your stake pool, you participate in a lottery so many times per epoch. It's like flipping a coin. The more ADA you have staked in your pool, the more times you can flip the coin. So you flip the coins throughout the epoch, and every time you flip, you either get to be the slot leader or you don't. And if you get to be a slot leader, then you have a chance to complete the block. And if you complete the block, then there's ADA that's being sent to the pool and delegators as a reward. So every epoch, there is a certain number of blocks that a pool makes. So it could make 0 blocks. It could make, this epoch we have 1 block so far, but last epoch we had 10. So there's kind of it's a lottery. So a block is a batch of transactions that are processed and packaged together, and it could be, there's a Cardano Explorer, you can look at it. It could be various different people or entities who are either writing something in the ledger or transacting in the ADA, or they have a Plutus script, which is a smart contract, and it's packaged into one container over a period of time, and that period of time and container is a block. So these are the basic terms. Any questions on these basic terms that I covered, or was there anything that wasn't clear? Okay. So I'm going to skip over one slide and get back to it later. So this this came out from Messari, and I thought that it was interesting. I know that we have some delegators that own Cardano, but also own other cryptocurrencies. And this was a comparison of Cardano with some of the other popular smart contract platforms like Solana and Terra. So this depicts where the initial distribution for these platforms was. So Terra, actually, let me see if I can fix that. So Terra was in brown here, tokens allocated to foundations and community pools. So it was 44% for Terra, 2% for Cardano, and then team and VC purchases. So for Cardano, team had 70%, Solana 48%, and Terra 56%. And you have some of the other ones here like Polkadot. And in blue is pre-launch. So basically, the tokens that went to anybody that wanted to invest in the project from early on. So you can see Cardano was mostly a public offering. And actually, they didn't offer Cardano in the States. It was offered for pre-sale in Japan only because they didn't want to face the US securities laws. So from Japan, back in those days, this was in 2017, they called Cardano Japanese Ethereum, very interestingly. But you can see that Solana and Terra put almost nothing towards the community. So basically, when they started, they were giving out tokens to their own foundation and their own investors, and then those have resold. So I think it's important to know that Cardano is a community-driven project, and it's the most decentralized blockchain, and it has the strongest community. If you look at any poll about Cardano, and Cardano always wins all the polls because the community is so large and it's very supportive. I think it will show well in the future. So this is a slide that I was looking for earlier. This is Bitcoin versus gold. So you can see gold in the 1970s. If you overlay the chart of gold in the 1970s with Bitcoin, so on the top row here with the black ink, Bitcoin starting in 2018. Actually, 2018 to present, you can see on the right hand side. And then gold in the 70s and 80s. So according to whoever put this together at Fidelity, this is Fidelity. This is significant, I think. Fidelity has been pretty good to Bitcoin. If you've read some of the news headlines that they've put out, they think Bitcoin is going mainstream within the next few years. But they overlay Bitcoin with gold, and they're showing, or they're saying that Bitcoin is following the path of gold in the 70s. And in the 70s and 80s, we had high inflation in the 70s, and gold price appreciated significantly. So this US dollars on the left-hand side from 30 to 800 here. So they think that Bitcoin is today's gold, like gold was in the 70s. Who knows? We'll see. I think it's a good argument. So for some that know about Bitcoin or want to know the difference between proof of stake and proof of work, with Bitcoin being proof of work, the profitability of mining goes up with the more equipment that you have. And you may have heard lately, there were hearings in Congress in the past 2 weeks on the environmental impact of Bitcoin mining. So Elon Musk at some point announced, I think this was back in February or March of last year, that Tesla will accept Bitcoin as payment for their cars. And then sometimes in May, he retracted and said that because of environmental concerns, Tesla will not accept Bitcoin. So Cardano is a net negative or net neutral for the environment. The servers that operate the blockchain don't use a lot of electricity because the number of blocks that you mint as a transaction validator does not depend on the power and processing of your machines. It doesn't depend on how much electricity you burn. So with Bitcoin, the probability of minting a block is dependent on amount of mining equipment and electricity you're using. With Cardano, the probability of mining and minting a block increases with the amount that you have on stake. And Ethereum right now is proof of work, but Ethereum is also going towards proof of stake, supposedly later this year. But they have been some delays within the past 2 years. We'll find out soon if that's true. So any questions on this, on the differences between Bitcoin mining and minting blocks on Cardano, proof of work versus proof of stake? Okay, we'll keep going. So this came out, and I think it was interesting to show the different wallets that came out. So we started with just Daedalus, which is the full node. There have been some updates recently. Today there was an announcement that there is a new version of Daedalus. I haven't tried it yet, but I've heard of some delegators that they're working on downloading and installing it. So Daedalus is a full wallet for Cardano, and it's slow. It requires right now 16 gigabytes of RAM, but it's a full node. Yoroi is a lightweight wallet that works on Android and an iPhone. And there are some other ones that have like ADA Lite. I know somebody that uses Nami. So they have different features. I recommend if you're new, use the Yoroi because it's lightweight and you will be not as much frustrated as you use Daedalus or some other ones. And why is it important to use a wallet, and why would you want to use a wallet? So with Ethereum staking, from what I've read so far, you will not be able to custody your own Ether. You're going to have to give it away to somebody else to custody it for you and stake it for you. So I have Ether, and my Ether is staked through Celsius, and I don't really have control over it. If Celsius goes under, I'm in deep trouble. With Cardano, you custody and you delegate your own ADA. So when you purchase ADA on an exchange, you send it to your wallet, and then you custody it in your wallet, and you delegate from your wallet. If you lose your phone, you have a paper recovery key, and with that paper recovery key, you can recover your wallet on any compatible device. So that's the difference. Is you don't have the counterparty risk of Celsius going down and me losing all of my staked Ether. I also stake a few other cryptocurrencies, like Algo, for instance. I also do it through Binance. So if Binance goes under, then I'm screwed. So that's the advantage of Cardano, is that you custody your own ADA, and there is no counterparty risk in case it goes down. So next, I wanted to go over a few kind of things that have been said about Cardano and a few accomplishments in the past year. In 2021. So in the cryptocurrency space is very tribal. Those who are invested in some project, they can be very negative towards other projects. So you will often find that those who are invested in Ethereum or Solana, they will say something negative about Cardano, and vice versa. So if you're in crypto Twitter, you know exactly what I'm talking about. So in 2017, Cardano was just a white paper, and the critics were saying that it's just a white paper. So we crossed that off in 2017 with the first version of the blockchain. Then Cardano is vaporware, and it doesn't have light wallets. So now we have light wallets, which is ADA Lite and Euroi. In 2020 or before, we heard that Cardano is centralized. So now Cardano is the most decentralized blockchain that exists. It's actually, Cardano is number 2 by transaction volume. It's second only to Bitcoin so far. But I think at some point, when we have more smart contracts, it's going to go to number 1 spot, first by transaction volume and then eventually by market cap, I think. Nobody is developing on Cardano. So smart contracts started in September. So right now, there are about 1,200 smart contracts that are running on Cardano, and we have the Plutus pioneers, and we'll look at the rate of adoption of smart contracts. So there was some negativity around the Sunday swap and the amount of transactions per block. So there are some changes that are being made to the block size that will be made in the next month, and also we have the first Sunday swap. It was the first decentralized exchange, and there are a few other ones that have come online in November, December. So now the negative narrative is that Cardano won't scale. So the next in the adoption and the next milestone on the roadmap is Hydra, which is the scaling protocol for Cardano. So here's something that also came out from Kraken, and actually I had something I wanted to show in the news. Let me grab that tab. So this came out from Kraken, and you can Google it, or I'll send this around after the call. New generation is smart contracts, and Kraken is a pretty big exchange, and they're in the United States, and they look at they have this Kraken intelligence. So they look at different blockchains, and they wrote this paper about Cardano. So they have some interesting stats here on the supply distribution and initial distribution, how it's different now. So who owns ADA and who stakes it, and supply emission, how the reserves will be depleted by what time. And actually, I made some discovery into this with our team of developers, and we've shown some of this data before. But if anybody is interested, I'll put this in the chat. It's a pretty interesting white paper from Kraken about Cardano and ADA. So this was one of the infographics that they had. This is the roadmap. So shelling and staking, that was big, and that came out in July, September of 2020. And at that price, price of ADA was like 7 cents, and when 70% of ADA got staked, the price went up over $1. So I think that shows you that the proof of stake protocol really works for value preservation, because those who are staking are less probable to sell their ADA. So as soon as Shelly came out and staking went live, the price shot up significantly. So token lock and native tokens, native assets. So what that means is this was in also in 2021. I believe it was in the beginning, like February, March. So native assets are other tokens that work on top of Cardano. So Cardano is a platform for cryptocurrencies, other cryptocurrencies than ADA. So ADA is the native cryptocurrency of Cardano, but there are also other tokens that work on top of it. And it could be anything. It could be a real estate venture that's released a token to raise funds. It could be airplane miles. It could be something like this Sunday swap. It's their swap token where you can own one token, swap it for something else. So there are millions. There's roughly 3 million other tokens that are operating on the Cardano blockchain right now. So that's significant. And then Alonzo hard fork. This was in September 2021. This is when smart contracts started on Cardano. Then we had NFTs and Chainlink partnership. This was in November. And DAXs in January and December and January. So December 21 and January 2022. So this is this is how the valuation went from under 10 cents to went all the way to $3. Right now we're at around $1. So I personally, and I have something else on this, but I'm personally buying ADA. I bought some yesterday, and even though I started buying it in 2017. If I have fiat money, if I have US dollars, I can't think of any other way that I could invest that. If I keep it in my bank account, I get less than 1%. I can buy a stable coin and I can get 8% annualized on it. But with a rate of reduction, the burn through in the rewards in Cardano, I and the number of new wallets every day, I don't think that there's a better investment for my US dollars. If I have some. So any questions on this, on the roadmap and what was accomplished and what's next? So this is roughly differences in January 2021 and January 2022. So wallets with balance in January, and this is important. I mean, these numbers are staggering. The results we have so far, just in 1 year difference, I think it's staggering. ADA with wallets with balance. I mean, basically, how many users have wallets that have balance? We were at 203,000 a year ago. Right now, we're actually approaching 3 million. I just looked at this today. Delegated wallets. So these are wallets that have ADA and are delegating some stake. So in January of 21, this was roughly over 100,000. Right now, it's over 1 million. We're actually approaching 1.1 million delegated wallets. So what's the difference between an ADA wallet and a delegated wallet? So an ADA wallet is just like any wallet you can have on an exchange. If you have a wallet on an exchange, in some exchanges you can delegate, but most you can't. I think there's only 1 or 2 that allow you to delegate, Bittrex and Binance. But there are also, I know a few people that hold ADA and have wallets, but they don't delegate. Why? I could never figure it out. And people either lazy or they don't want to do it, or they're afraid. For the most part, they just don't understand and they're afraid to ask and they're busy with something else. So yeah, so we were 112,000 delegated wallets. Right now we're at over a million. Average ADA stake per wallet 191,000 in 2021, and today it's actually, I looked, it's 21,000 average ADA per delegated wallet, and I get this from ADA stat. I can show this later. So we had roughly 1,000 stake pools a year ago. Today we have around 3,000 stake pools. So the stake pools are transaction validators. And ADA staked 21 billion in a year ago in January, 23 billion or 71% today. New wallets per day, we had 1,400 a year ago. Right now we're roughly at 5,000 new wallets per day that are coming online. So 5,000 people are installing one of the available wallets per day. Percentage of staked wallets 55%. Now it's 37. So it's actually a lesser percentage staking, but I think I know why that's happening. People just don't pay attention. Circulating supply, we were at 31.8 billion. Right now we're 33.1 billion. So there's a constant inflation in the supply. It's right now it's around 2%. So what inflation is, and I have a slide on this next. So it's basically ADA that's coming from reserves into circulating supply, that's entering circulating supply. And ADA price in January of 2021, it was 17 cents. I made this slide a month ago. Price was at $1.36. Right now it's actually $1.06. So even a better time to buy. So, but you can see the changes. We've achieved a lot, and both in number of users, number of wallets, in price appreciation, and in the growth. And things change fast here. You're going to wake up in a few months and you're going to see ADA, back at $3, and you're going to be thinking of why I didn't buy more. So next, I have a slide on where rewards come from. But before I jump to that, are there any questions on what was accomplished in the past year, or any of these terms here that maybe somebody doesn't understand or has a question about? Okay, let's keep going. What about let's see. We're about an hour into it, and I only have a few slides left, so I think we're doing good. Where do ADA rewards come from? So 75% of rewards come from reserves, and reserves are ADA that has not yet been minted. 25% come from transaction fees. So that makes up a block reward. 75% goes to stake pool and delegators, and then 25% goes to the treasury. And the treasury has about 500 million ADA in it right now, and it's there's a what's called a catalyst. It's a process where you as a delegator can vote for projects where people are looking for funding for various projects. So you get to vote where that money is being spent. Also, if you want to develop on Cardano, you can put together a proposal for Catalyst, and the delegators vote on how that money is spent. So 25% of rewards go towards that fund, which I think is pretty cool. So this is updated stats. Right now, 33.5 billion ADA in circulation. This is 71% of ADA that will ever be in circulation. Total and maximum supply. So this is the maximum supply. Like we have with Bitcoin, we'll never have more than 21 million Bitcoin in circulation. There will never be more than 45 billion ADA in circulation. And why 45 billion? Why that number? Charles Hoskinson answers that he's the CEO of IOHK, the company that develops Cardano because 44 billion was too little and 46 was too much. So just a number that was picked in the beginning. But reserves currently in reserves, I did some research as of today, 11.4 billion left in reserves, 23.6 is staked. So this is the stake that delegators are staking to some pool to receive rewards. And blocks per epoch right now, 21,000 blocks. Inflation is at 2%. So next, so I was, if you have Twitter and you read what people write on Twitter in the crypto space, or CT as people call it, crypto Twitter, I read a lot of whining about, it's the rich that are getting richer and the poor are getting poorer, and those who have Bitcoin, they get more Bitcoin, and 80% of ADA is owned by 10% of holders. Well, guess what? Sentiment made a research on this. The holders who have between 10,000 and 1.5 million ADA have doubled within the past month. So the wallets that have large amounts of ADA have doubled as the prices went down, which means that those who hold ADA, they're buying more, and the little guys who are saying the big guys are getting bigger, they're actually scared and they're selling their ADA. So it's a paradox that there is all this complaining that the rich are getting richer, but when people get scared, the little guys are, or those who have fewer than 10,000 ADA in their wallets, they're the heaviest sellers. So it is what it is. But next time somebody complains that the rich are getting richer, ask them what they're investing in. So, and if they're still holding or selling. And there was actually something else on this. I just want to pull up. Address distribution. So if you want to dig into this, you can look on Data Studio. This is publicly available data about Cardano, but you can see like they have different parameters here. Like if you own between, let's say, 1 and 5 million ADA, you're a great white shark, and you'll be designated with this brown color. And you can see whether at a certain epoch they've increased or reduced their stake. And if you're here in the blue, if you're a shell, then you have between 100 and 500. So you can see like the dynamics of which group of holders is growing and which is reducing throughout epochs. So it's a pretty good indicator of, so how do we know that the larger wallets are buying? Well, we look at this. We can see who is increasing their stake and how much ADA they have right now. So that's where the data is coming from. And then on stake pools, this is ADAnomics. So there are 3,000 stake pools roughly, and you can see that here. So right now, it would exactly 3146, 3,146. So out of those, 183 are making, they have no stake. So they run a pool that doesn't have any ADA delegated to it. And here, Epoch, let's go back one, 315, let's say. So this was 2 epochs ago. Pools that have, or delegators that have rewards, 981,000. Without rewards, 119,000. So this is delegators. In total, there were delegated 1.1 million. And this is stake pools. So this was delegators here. So 90% of people are making rewards. And this is stake pools here in the same epoch. 1083 had blocks, so roughly a third. So if you don't have a block, you don't have a reward. With stake and no block, so they have some ADA delegated to them, but they haven't made any blocks because they haven't participated or they haven't won in this lottery. So that's 1880. So but this is not the same stake pools in every epoch, because every epoch there is a new lottery or slottery as we call it, and there's a different pool that will have more blocks or less blocks. So it's completely random, but it's based on the number of blocks that you have. And if you look at our pool, so if you go to stakemyada.net, so this is our website that we developed and belongs to our pool. There's some interesting information here on the staking. There's a glossary, so there's some Q&A, where rewards come from if you want to review some material. There's also instructions here how to delegate with Daedalus and Uroi. So if you click on this, or if you run into an issue or you need help with this, you can always contact me, but this has instructions here. There's also useful links. So if you go to the useful links, there are links here to our pools page in various resources. So one of the ones that I like, there's ADA pools, and there's this one I like is pool tool. So pool tool, for example, they give you slightly different data. So pool tool gives you data per epoch and per delegator. So we'll wait for this to load. So you can see, so this is epoch. So there are 5 days in each epoch. So you can see number of blocks that was minted by our stake pool. And if you get lost, there is a search here in the home, but in the current epoch we have 1. In the previous one we had 10. Then we had 3, 1, 1. So here, delegator rewards, you're going to have different rewards based on the number of blocks and the amount of ADA that's in the pool. So delegators made, in the last epoch when we had 10 blocks, there was a higher reward because we made more blocks. So it's 6,100 ADA, and the pool received 464. So it had a 10% return on stake. And then each epoch, there is a different percentage here. But if you go to here, for instance, in ADA pools, they give you a pretty good idea raw lifetime. So this is the overall return of the pool, since the beginning of its existence. It's about 3.5% annualized, which is a good return because the inflation is at 2%. So inflation is amount of ADA that's added from reserves into circulation. So if you have a pool, when you're choosing a pool, if you can beat the inflation number, then you're in a good spot, right? Because you're beating inflation, so you're making better rewards than inflation. So that's why that matters. Any questions on this? All right, we'll keep going. I have a few more slides. So this is the annual inflation. We're just below 2%, and we've covered the circulating supply. We're at about 71%. I want to show this real quick. This is something that I put together. Rewards in different epochs. So in epoch, this is 244. ADA rewards between all pools and all delegators were 15 million. So in the past epoch, 316, 10 million. So the rewards have been cut by a third. And why does it happen is there's a reward attrition that every epoch. So Bitcoin has its halving event every 4 years. With Cardano, that the reduction in the rewards for minted blocks happens every 5 days. So there's a gradual reduction in rewards. But if you look, 63 epochs, that's 315 days. So it's just it's about 10 months, right? So in about 10 months, we've cut the rewards by a third. And these rewards, they're getting divided up between a larger number of delegators, because we had 100,000 delegated wallets a year ago, and now we have a million delegated wallets. So we've cut the rewards by a third, but we have 1,000% increase in the number of delegated wallets, right? So when this continues, you will see what that does to price, and what will the rewards look like. Last year in 21, 3.3 billion were paid out. Next year or this year, 22, 2.1 billion. 2023, 1.7. So every year, the amount of rewards that's going to be paid out is going to be reduced. So we have a 10x per year growth in user base. We have a 30% reduction in the number of rewards that are being paid out. So over time, think about what that will do to the value of ADA as there are new capabilities that are being introduced. So, and this is the reserves, right? So 75% of rewards come from reserves. So last year the reserves were at 12 trillion. In May we're going to go under 11. I'm sorry, 12 billion. In May we're going to go slide under 11 billion, and then a year from now, or let's say 14 months, it's going to be less than 9 billion less in reserves, and then this reduction will progress. In the year 2033, there will be less than $1 billion left in reserves. So think long-term value versus the price of ADA today. Before I go to the next slide, any questions on this? Any questions on rewards, reserves, supplies? So I'm drinking Lagunitas IPA, or Indian Pale Ale. It's my favorite beer. This is not a paid advertising. I'm just trying to soften up the crowd a little bit. I have about 8 slides left, so bear with me and we'll be done in the next 10-15 minutes. So what's the process to stake ADA or become a delegator? We have this available. I posted this on LinkedIn. It's also on our website. You acquire step 1, acquire ADA on an exchange. You have to go through KYC, know your customer, and register. Binance, Bittrex, Coinbase are 3 of the largest ones. Kraken. I have accounts in all of them, but choose the one you want. If you want something quick, I suggest you go with Coinbase, because Binance and Bittrex, they're pretty slow in KYC. So you download and install a compatible wallet. I suggest for newcomers, use Yoroi because it's quick and it's a light wallet. Then you send ADA to your wallet. You delegate your stake. There's a button in the wallet called Delegation Center. On our website, stakemyada.net, we have a step-by-step instructions on how to do this. And that's it. You grow your stake and you receive rewards. If you buy ADA again and you send it to the same address in your wallet, then the newly added ADA will automatically be accounted for once the next epoch turnover happens and a snapshot is taken. So it's pretty easy to add to your stake or add to your position. So how soon can you start receiving rewards? The short answer, it takes approximately 20 days, or depending on where you are in the epoch when you first delegate your stake. So why does it take 20 days? So when you delegate your ADA, you're an epoch N, let's say, then there's an epoch turnover. We're going to have epoch turnover tomorrow with a new epoch. It happens every 5 days. So when the epoch turnover happens, there's a new epoch, a snapshot of your wallet is taken. And then in the next epoch, N+2, blocks are produced through the lottery process based on the ADA that you have staked to the pool where you are delegating your stake. So at N+2, the ADA that you have delegated is being accounted for in the delegation process. In the next epoch, N+3, that's going to be the next. It's epoch 3, but it's the next epoch after your ADA was used to mint blocks and participate in this lottery. If your pool that you're delegating to made blocks, then you will be rewarded based on the number of blocks minted and amount of ADA that's delegated to the pool. And then an N+4 in the next epoch, then that's where you will be paid rewards, and rewards will come back to the wallet from which you have delegated your stake. So this is for somebody who asked me today earlier how long we had a new delegate, and I was asked how long does it take to start receiving rewards, or is it does this happen immediately? So this is an answer to that question. It's going to take approximately 20 days for you to start receiving your rewards, but your stake will be accounted for in the minting process starting tomorrow when we have the epoch turnover. So any question on how long does it take to start receiving awards or how to delegate, which was this previous slide? Yeah, so if you added ADA to your position, to your wallet, if it's already in your wallet and you're already delegated, then as soon as you add ADA to the wallet, the newly added ADA will be delegated, but it will be accounted for as your stake next time the snapshot is taken. So if you added something yesterday, the snapshot will be taken tomorrow when we have epoch turnover. And if you're ever lost and you don't know where one epoch starts and another begins, if you go to any of the sites, like if you go to ADA pools and if you navigate to their homepage, it will show you right here. So right now we're at 83% of the current epoch, and the current epoch is 318. So, and it also shows you here, epoch ends in 19 hours, 47 minutes, and 41 seconds. So you know that it's tomorrow. So tomorrow, when the snapshot with your updated amount is taken of your pool, then the ADA that you have added to your wallet will be accounted for when we mint blocks and receive rewards. So the question was, if I added ADA yesterday, when will my increased amount be accounted for in the minting process? So volume and fees, Cardano versus Ethereum. So if you've been in the space for a while, there are many platforms out there that say that they're Ethereum killer. And why is that important? Well, Ethereum was the first smart contracts platform, and it's also like the Internet of Things of Web 3.0, right? So other platforms that came after, and actually, if you know the history a bit, Charles Hoskinson was briefly for about 6 months CEO of Ethereum, and he and along with 8 other folks were like the founding members of Ethereum. But then the band fell apart, and Vitalik Buterin stayed, and Charles left to start Cardano, and a few other people went to start their own projects. So Cardano competes with Ethereum. Cardano has an Ethereum virtual machine where you can actually take a project that runs on Ethereum and convert it to run on Cardano. So how does that compare? Cardano has higher volume and cheaper transactions by a factor of 568. So that's where we are right now. I do think that as time goes by, and everybody complains about Ethereum high fees, but Ethereum has been around for a while, and it has a certain user base and a certain dApp and application base. I think going forward, as rewards are diminishing on the Cardano blockchain, transactions on the Cardano blockchain will become more expensive. But I don't think that it's going to be um, expensive by that much. So I guess we'll find out. But right now, Cardano is cheaper and the volume of transactions is higher. So this is statistics. 29 million transactions, 1,068 smart contracts. So that's increased over a month by 13%. 1.1 million delegated wallets, 3 million wallets overall, 70.6% staked, and 3,000 stake pools. So that's where we are right now. So we're looking for of course, for this number to rise, especially on the smart contracts. When we have more smart contracts, we know that there are either new developments or projects are migrating from other platforms to Cardano. And this is the transaction types that we have. So on the bottom here, we have the epoch, and then in red, with Pluto scripts, those are smart contracts. With metadata, those are native tokens for the most part. So native tokens and smart contracts are growing. The blue ones are the simple transactions. So that's like buy, sell ADA or write something in the ledger for immutable records. So we want to see the number of smart contracts and Pluto scripts, which is smart contracts, and native tokens, which is transactions with metadata, go up. So that's what we're seeing in the past epochs. We don't have the data from the previous epoch, but right now it's looking good. So there's a lot to look forward to. And developments this year. So right now we've completed Gogan, Shelley, and Byron. So Byron was the foundation era when Cardano was centralized. Shelley was the decentralization of Cardano. Gogan was the smart contracts and dApps era, and right now we're in the Basho, so we're in scaling. There are some changes that are being made on the Cardano blockchain in the next month. You'll see block size increase to allow for more data for smart contracts. And then Hydra is coming later this year. By the end of this year, Hydra should be implemented, which is Hydra is a layer 2 scaling solution for Cardano. So we're looking forward to that. And then drivers behind the value of ADA. So number of wallets per day growing. We have about 5,000 new wallets per day. ADA staked is consistent around 70%. It's been consistent around between 68 and 72% since Shelley came out. So we always have new users joining. Rewards are going down. Number of rewards that are going down. So we have more users and more wallets, but less ADA is being added to circulation. So as time goes by, the market is in a rut right now, and everybody's looking at Bitcoin. But as we go forward, Bitcoin will recover. And I'm personally convinced that one day it will hit $1 million. No question about that. I think we'll hit $100,000 per Bitcoin within the next, let's say, a year to a year and a half. And imagine what the price of ADA will be when Bitcoin goes 3 or 4 100% from here. Since altcoins appreciate more, it will appreciate in the higher percentage. So I think that the lower price today is an opportunity for those who are bold and who have conviction to buy more. I'm certainly buying more ADA, and I hope you are as well. So delegated wallets 1.1 million. That's growing. Total wallets 3 million, and average ADA per delegated wallet. So this was actually about a year ago when we looked at the stats. This was a 100,000 was average per delegated wallet. Right now, it went down by 80%, so it's 21,000 ADA average per delegated wallet. So as the number of wallets are going up, the average ADA per wallet is going down. And what that means is, as the larger wallets are selling off, the smaller participants are entering the market and they're buying ADA, and they are getting into this market at the price where they can buy now. So there's I personally think that crypto is the last open market. Um, it's not subsidized by the government. You don't have quantitative easing, and you don't have the plunge protection team. So on the crypto market, there is also always a buyer and a seller that come together and agree on a price without third-party participation or third-party involvement. Where somebody is trying to keep the price from falling or raising or whatnot. So the buyer and the seller of ADA, they have to agree on a price in order for the deal to happen, and that's partially why you see wild swings and volatilities, because it's a free market. But the average ADA per wallet has going down for that reason. Is the participants who have been invested in this project longer are selling to those who are newcomers. So any questions on the ADAnomics or wallet statistics, or what's happening with the stake wallets or whatnot? So we're really at the end here. I have just a couple more things to go over. The links that I showed today, if you go to stakemyada.net, like I was saying earlier, there's a useful links page. So the links will be there. There's a Cardano staking calculator if you want to figure out how much you can earn. There's a page on Messaria for Cardano. We have pages for LEGA on ADA pools, pool tool, and ADA stats. So check those out. And then I had a request from somebody to a question came in by email as I was doing the demo, asking how much can I expect to earn in rewards if I buy ADA and stake, which I think is a valid question. So let's take a look at that real quick. So overall, about our pool. So right now we have, if you go to adapools.org, you go here to the search, you type in LEGA, LEGA. So that's what's called a pool ticker. And it will take you to our pools page here on adapools.org. We have right now 68 delegators. So the delegators are those who are delegated their ADA to our pool. ROA, so return in lifetime, 3.5%, and the M is the past 90 days, so that's slightly lower. Then we have the live stake and active stake. So live stake is how much ADA is in the wallets that are delegating to the pool, and then active stake is how much ADA is accounted for in the current minting process. And these fluctuates. If somebody adds ADA to their wallet, then the active stake will increase in the next epoch when the snapshot is taken. And if somebody takes out ADA, then the opposite will happen. The active stake will be reduced. So live stake is the ADA that has not yet been accounted for in the minting process, and active stake is the ADA that has been accounted for in the minting process based on when the snapshot was taken. Pledge is what the stake pool pledges or promises to keep in its wallet to keep the pool running. So we promise as stake pool operators to keep a certain amount in the pool to keep the pool running, and that affects our ranking. Margin is so if you ask, so what do you get out of actually running the pool? So a few things. We try to invite new community members to the Cardano community. We think it's essential to bring in fresh blood, new people, new ideas, new liquidity, new capital, new participants, new educators, new knowledge seekers, everything that the community needs, right? Um, so we get new community members. There's also a margin of 2%. And what that means is for every 100 ADA that you make through the delegation process, the stake pool keeps 2%. And then the fixed cost is what it costs us to run the pool. So we run servers that process transactions. And there's a cost to us to keep those servers running, to keep them upgraded, and to install new versions of Cardano and all the ancillary software that has to be running on those servers and keep it up to date. So there's a fixed cost. So before that margin is paid out, every epoch from the rewards, we keep 340 ADA. And then, estimated blocks per epoch is what we should be getting in rewards based on the amount of ADA that's staked in the pool. So that's 3.9, but that's just estimated. Block trend is what we minted in the current epoch. So we have one, unfortunately, so far, but there's a law of averages to it. Lifetime blocks, how many blocks we've ever minted, and then luck is how lucky we are. So if we have minted more or less than 3.9 blocks. Delegators is again how many folks are delegating to us. And then we have some social media links. So that's what these mean. And if you click on delegators here on the delegators tab, you can sort it either by amount from largest to smallest, or the date when they were registered. So we have a newbie today, somebody that joined today with 15 ADA. But let's look at somebody who has like a decent amount and who has been around for a while. Again, I don't know who these delegators are. So if you want to find out, how much you can earn, let's pick somebody with a decent amount. Let's say 30,000 ADA, and I don't know who this person is, but I'll randomly click on their address. Hopefully they've been around for a while. Yep. So this person has been staking with us for a while. So they're about to be paid out tomorrow, 43 ADA. I think this is based on the 10 blocks that we minted in the previous epoch. And then this is the epoch for which the rewards were earned, and here are the rewards. So 43 they'll get tomorrow, and then 4 days ago they got 11 ADA to 11, 11, 6, 16, 16, 35, 16. So so why different number of rewards here, even though they've had this 30,000 ADA staked here for a while? Well, this is because we minted a different number of blocks. So if you go here, I actually like the on pool tool, the epoch and then the block. So the last epoch when we had 10 blocks, if we go here, they made 43 ADA in rewards. And then the previous epoch when we had 3, they made 11. And when we had 1 block, they made 2. So it's a combination of how much ADA you have staked based on how many blocks your pool produced, and that's based on the slottery, and that's based, the slottery participation is based on the amount of ADA staked in the pool. So to the person that sent their question by email, I hope that answers your question of how much you can expect to make. And if I didn't answer that, please feel free to contact me anytime. So how to contact me? admin@stakemyada.net is my email. You can also find the pool on LinkedIn. We have a, so if you go to our website, stakemyada.net. There's a useful links here. I have our email here on the bottom right here. Contact me by email. And we have our social icons, Twitter, LinkedIn, YouTube. I have posted videos from previous delegator calls. So we have these calls once a month. We have different subjects or slightly different subjects. Agenda is always different. I try to keep it interesting for those who are new, as well as those who have joined in the past. So if you go to our YouTube channel, there are a bunch of videos here. There are some in Russian, mostly in English. So you can watch the previous videos. Well, thank you to everybody who joined today. And if you have any questions further, please feel free to contact me. And the next delegators call will be on the first Thursday of March, and I will send invites for that. Thank you for joining, and have a good night and happy staking.